please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Saturday. I'm Arun Jaitley and let's take a look at the top headlines that we're tracking for you today. GST Council moves to simplify the current return filing process to a single return every month, moots the three-phase process which may take 12 to 18 more months to stabilize, also decides to make the GST Network a fully public-owned entity, but no consensus on the imposition of sugar cess, and a group of ministers will deal with the issue along with other revenue-raising options.
This is actually bringing our markets in line with global standards. It's a positive for markets, it's a positive for investors.
NSE welcomes SEBI's decision to allow stock exchanges to extend trading hours for equity derivatives. From the 1st of October, exchanges can set trading hours between 9 a.m. and 11:55 p.m. subject to the regulator's nod.
Last 7 or 8 years have averaged 2% roughly. It's stronger than that right now.
Ahead of Berkshire Hathaway's annual meeting today, billionaire investor Warren Buffett says the U.S. economy is set to grow at a faster clip. Also reveals that Berkshire has ramped up its stake in Apple. Apple hits all-time high post the commentary. Banks and the central government are divided on how to save power projects from liquidation after the RBI circular. Sources say creation of a fund to rescue stressed projects or a special purpose vehicle are the key ideas on the table. That's a CNBC TV18 exclusive. Straight to the top story that we are tracking for you this morning. The GST Council has unveiled a new, simpler return filing process. Currently, the industry is filing multiple returns and the goal is to move towards a single GST return every month. Revenue Secretary Hasmukh Adhia unveiled a three-phase process. The GST Network will take 6 months to set the stage for this transition. Incidentally, the Council also decided to make the GST Network a fully public-owned entity today. Here is the Finance Minister Arun Jaitley and Finance Secretary Hasmukh Adhia explaining the new return filing process.
This return filing process, because the preparation of the new alternative returns and its implementations, the software necessary for this would take about 6 months. That has been approved by the Council today, and within a period of 6 months that would be now made applicable itself.
We will try to bring down this gap between the provisional credit claimed and the credit which is otherwise admissible as per the seller's information. And after 6 months, once we find that the rate is reducing, the gap is coming down, we will switch over to the actual implementation of the GSTR new return system, in which all B2B sellers, B2B people will have to put details of all their sales invoices, and the only way to get input tax credit will be if your seller has uploaded the invoices online.
In fact, Sapna Das joins us with the details of the group of ministers on the sugar cess. Sapna, who are the members of this panel and what are its terms of reference? Also tell us a little bit about the group of ministers constituted to look into the issue of incentivizing digital payments.
First of all, speaking on the sugar cess matter, the government has lost no time in setting up both these GOMs. So if you look at the sugar cess GOM, there is very clearly, as indicated earlier by the Finance Minister, it's a 5-member panel that has been set up, constituting states like Assam. In fact, the Assam Finance Minister is going to be the convener for the group. You also have Punjab, you have Tamil Nadu, and a couple of other states which are part of that. What is also equally critical, you have Maharashtra, very, very important. What is also equally critical, if you look at the terms of reference carefully, of course, the first TOR is very clear in terms of the possibility of suggesting a sugar cess, but for a temporary period. So the catchword there is, for a short period, for a temporary period, and how feasible that may be. The second term of reference that is mentioned very clearly is that, how to, or probably look also at alternative options or other options to create a kind of a fund which can take care of contingencies like the glut in sugar production right now. So here again, I would look at this line very carefully, like the issue of sugar production. So you never know. Possibly they may also look at this matter in a larger context, where other sectors, commodities may also be taken into account if there's a requirement to do that as of now. Third, last but not the least, in terms of the terms of reference, of course, the fact that what will be the impact on the consumers. So this is a very detailed terms of reference. They started off first with the sugar matter, because as the finance minister has indicated very clearly, it's a matter of great urgency, and this has now been constituted. So we have to now wait and watch and see what kind of recommendations come up in the next 2 weeks. It will not only be on the sugar matter alone. My sense is that possibly they might look at this matter of cess versus rates versus alternative mechanism to raise revenues in a larger context.
Absolutely. Thank you so much for those details, Sapna. In fact, we spoke exclusively to state finance ministers to get a sense of where states stand on the sugar cess levy issue. But let's listen in to the finance minister first.
Next item before the agenda was the imposition of a cess on sugar, particularly considering that the cost of sugar has risen beyond rupees 35 per kilogram, and the market price is between 26 to 28 per kilogram. And the sugarcane farmers are in deep distress. And therefore, can we impose some kind of a cess?
All cesses have been substituted in the GST. Now, if you are going to bring a cess for a particular commodity, there are other candidates as well. I am, for example, in Kerala, I said, okay, then let's have a cess for rubber. Our rubber farmers used to get some 200 rupees per kg, are getting only 120, 90 rupees, between that range. So why sugar alone? We had to support these farmers also. So that was the thing. So it has to be a general thing. On the hand, if you want to support sugar farmers alone or sugar mills alone, then go for a general budget. This 10,000 crores of rupees will constitute hardly 0.5% of this whole central budget. So they have very buoyant direct tax revenues, which have been very buoyant current year. Therefore, let them to the budget route support it. Why bring in complicated things by bringing a cess? And if you are bringing, then well, rubber also must be compensated.
चीनी के ऊपर सेस लगा दो, ये था प्रपोजल। 3 रुपया पर केजी सेस लगा दो। इसके मतलब जो चीनी खरीदते हैं उनके ऊपर पूरा ये थोपा गया। उनके जो 3 रुपया मिला उनसे कहाँ जाएगा? जो चीनी के मिल है, जो चीनी के ओनर हैं, उनके पास जाएगा, वो देंगे फार्मर्स को। पहले बोला 10 स्टेट इसमें है, हमने हिसाब करके देखा 5 स्टेट है, 10 नहीं है। सवाल ये था कि जीएसटी में सारे सेस एब्जॉर्ब कर लिया जीएसटी, हमने सेस छोड़ दिया है, सैक्रिफाइस किया है, कुर्बानी किया है। आज क्या हो रहा है? एक आइटम के लिए पूरा जीएसटी को डिस्टेबलाइज कर रहा है।
In fact, the GST Council meeting also saw states express serious concerns about their revenue situation. In fact, sources say that only 2 states, that's Mizoram and Arunachal Pradesh, are reporting a revenue surplus. Manipur is revenue neutral. 7 states have a revenue deficit between 10 and 20%. These include states like Bengal, Uttar Pradesh and Gujarat. 5 states, including Karnataka and Madhya Pradesh, have a revenue deficit between 20 and 30%. 13 states and union territories have a revenue deficit of over 30%, and these include states like Bihar, Uttarakhand and Punjab. On that note, it is time for us to take a short break. But coming up, SEBI allows exchanges to extend trading hours in equity derivatives. More on that on the other side of the short break. Welcome back. You're still with us on Business Saturday. On to all the action from Dalal Street then. Markets stumbled in trade yesterday. Almost all sectoral indices ended in the red, except for the Bank Nifty. The Nifty managed to hold on to the 10,600 mark, ended with cuts of more than 0.5%. The Sensex breached the 35,000 mark, shed about 188 points in trade. The mid-caps mildly underperformed the benchmarks, ending 55 points in the red. The banks, however, outperformed with gains of 40 points. Meanwhile, the SEBI has allowed exchanges to extend trading hours in equity derivatives between 9 a.m. to 11:55 p.m. This will be effective from the 1st of October 2018. Now, the exchanges will have to seek prior approval from SEBI before making any of these changes. In a conversation with CNBC TV18's Yash Jain, NSE CEO Vikram Limaye welcomed the decision and said that the Indian investors will now be able to hedge their risks better.
it is bringing our markets more in line with international markets, whereas you know the trading hours for the derivative segment in particular are quite long and extended beyond the cash market hours. And so this is actually bringing our markets in line with global standards. It's a positive for markets, it's a positive for investors. Investors will have the opportunity to hedge market risk against any specific events that are happening globally beyond our normal trading hours. And so that should be a positive. Also, it aligns the equity market with the commodities market. Anyway, the commodities markets are open till 11:55. This segment will also be available.
Okay. One clarification which I would want from you, of course, the directive from market regulator says that equity derivatives will be allowed till 11:55. Would that only cover index futures or would that also be applicable as far as stock futures are concerned?
So obviously a reading of the circular would indicate that it is not restricted to index, because they haven't said that it's equity index derivatives. They've said equity derivatives. So that would imply that it is both the index and stock derivatives.
Does this particular directive look like a precursor as far as extension of market trading hours in normal market, cash market is also concerned? Do you think they're just testing the waters with this particular directive, and an extension in the normal market is also a question of when and not if?
I don't necessarily think so. Also because if you look at the global precedent and examples, you don't have examples of cash markets being open for 15 hours, 20 hours anywhere else in the world. So there's no reason for us to necessarily keep our cash markets open beyond our normal hours. But the derivatives markets globally are open for an extended period of time. So I don't expect the cash market trading hours to change just because the derivative trading hours have changed.
And from all the action on Dalal Street to all the action on Wall Street, US stocks closed sharply high on Friday as Wall Street shrugged off a lackluster number in the government's monthly jobs report. The US economy added 164,000 jobs in April, lower than the 195,000 jobs expected, while the unemployment rate fell to 3.9%. The Dow closed up. So let's bring those charts up for you again. The Dow closed up more than 300 points, with the S&P and Nasdaq in the green around 1.5%. Shares of Apple hit an all-time high to lead the technology sector higher after famed investor Warren Buffett revealed to CNBC that he purchased 75 million Apple shares during the first quarter. Here are the excerpts of that exclusive interview.
Well, all I can say is that the last 7 or 8 years have averaged 2% roughly. It's stronger than that right now. I mean, but there's no way to calibrate it through. And you know, they have their own problem with seasonal adjustments, as you point out in the first quarter. They apparently got the wrong seasonal adjustment, but they've had years to work on it. They still can't get it solved. I would say that the Berkshire Hathaway index of activity, business activity, is stronger than it's been. And it's been improving year after the financial panic. I like what I saw too. Their surprises, I mean, it is an unbelievable company. I mean, if you look at Apple, I think it earns almost twice as much as the second most profitable company in the United States. It's a wide gap. I mean, it's an amazing business. I mean, here's a company that's, you know, whatever the earnings are, 60 billion or whatever, and you can put all their products on a dining room table. I mean, that's not the way it used to be in this country.
There were a lot of doubters on Wall Street before those numbers came out this week. Were you in the camp that was a little worried about what was happening?
Well, we don't own it for the next quarter. I mean, it is incredible to me how you read the investor conference calls after reports, or you read all the analyst reports, and they talk about what it's going to do next year. Nobody buys a farm based on whether they think it's going to rain next year or not. They buy it because they think it's a good investment over 10 or 20 years. So the relevant question when you're looking at buying part of a business, what you're doing when you buy a stock, is where's it going to be in 10 or 20 years? It may be that you don't know, in which case you don't have to do anything. But the idea of spending loads of time trying to guess how many iPhone 10s or whatever it may be are going to be sold in a given 3-month period or something, it just, to me, it totally misses the point. I mean, it was like worrying about the number of BlackBerries, 10 years ago. And then what really counted was what was going to happen over the next 10 years.
Right. So the shares sold down before that, heading into it. Do you like the stock? Have you bought more of it? Do you think that that's another place you want to be?
Well, I don't talk about what we're going to do, but our 10Q is coming out on Saturday morning, so they can actually figure it out from looking at the footnotes in there. We bought quite a bit more Apple in the first quarter, at the first calendar quarter of this year. It's their second quarter fiscally.
More than you had reported in February when we got the SEC filings. I think it was 163.5 million.
Well, that's what we had at year end. Yeah, I think we had something like that.
That was the February 14th figures.
Well, that was probably, that was reported on February 14th. I think that was as of December 31st. And I think it counts our pension holdings too, maybe. But you're right, we had 160-odd million shares in Berkshire.
Wait, so you bought a lot more in the first quarter?
Quite a bit more, yeah.
I mean, you own a lot already. So when you say a lot more,
well, it'll come out on Saturday morning, and so it'll be reported, and we're not going to be active now. So you'll see it went up about 75 million.
Welcome back. You're still with us on Business Saturday. Hectic efforts are on to save over 40,000 megawatts of power projects from going to the insolvency courts or to liquidation. But bankers and the government finance companies, which is PFC and REC, are divided over how to go about it. Lata Venkatesh is here to explain why they're divided. Lata?
Okay, first let me refresh your memory. In February, the Reserve Bank put out a circular asking banks or telling banks that all stressed loans over 2,000 crore will have to be either resolved in 6 months or taken to the NCLT. Now, the blow falls largely on power projects because about 10,000 megawatts of power doesn't have gas and another 20,000 megawatts doesn't have power purchase agreements. And these are definitely going to the NCLT, but you may not find good buyers in the current state. So bankers are trying to resolve it. There was a meeting in SBI with bankers who own largely, who have exposures to these power projects, and PFC and REC. Now, what the bankers have proposed is that take 14 fully completed projects and then take the sustainable portion of the loan, keep it with the project. The unsustainable portion should be partly written off and partly converted into equity. And 51% of the equity is sold to a good promoter, either a stressed asset fund or another power company. And the banks also could retain a small portion of the equity. The current promoter should be reduced below 25%. And the hope is that they will get some money because of the quality of the plant. The bankers, of course, are hoping that the government could have the NIIF, the National Infrastructure Investment Fund, also probably contribute some money and buy some of the power projects. But they're not expecting the Reserve Bank to change the circular. Now, the PFC, REC and the government have a different point of view. They believe that even if you try to find a promoter, the promoter will take the shares at absolutely basement prices. So they will be selling the plants for a song. So what they should do is all these stressed power plants should be put into a special purpose vehicle, that company will be owned by all the lenders. But it will be run at arm's length. It will have all these power plants which are transferred to this SPV at net book value, not at a loss. And it will be run by some power company which is contracted to run them. And when the situation in the country improves and demand improves and more PPAs are there, at that time, when the economic value of the plant is good, when the market value is good, at that time these plants should be sold. But obviously the second plan requires that the RBI does not force the banks to mark all of them as NPA, because in that case it will be a larger loss. The meeting remained inconclusive and we don't know exactly what is going to be the final outcome, but obviously efforts are on.
Absolutely, efforts are on, Lata. Thank you so much for taking us through those details. On to some national news then. It's an extensive day of campaigning in Karnataka as the prominent leaders of the BJP, including Prime Minister Modi, campaign across the communally sensitive areas of Mangalore and Bantwal today. A string of rallies have been lined up by both the BJP and the Congress across Karnataka. The BJP intensifies its fight for the state with influential names like Party Chief Amit Shah and Home Minister Rajnath Singh coming in for campaigning. Meanwhile, Congress leaders like Shashi Tharoor and former Kerala Chief Minister Oomen Chandy will also hold rallies in Karnataka. So the battle for Karnataka, they're heating up. Moving on, after a phenomenal launch last year, Network 18 is back with the second edition of the Global Natural Resources Conclave, slated to be held in New Delhi at the end of this month. Here's a quick recap of last year's conclave and what you can expect this year.